There is nothing wrong with buying crypto, NFTs, or other in-game currencies, as long as you're not kidding yourself. Have you ever played Trip to Jerusalem or the game of musical chairs? Isn't it fun? Even though you all know that eventually, you will all get eliminated and only one will win the game. You get to enjoy the game because of two reasons. First, you all know the rules, and second, you all know from the beginning that it is just a game. The music will not last forever, and eventually, everybody will lose, except for the lucky player. This also holds true for crypto, NFTs, and in-game currencies. Don't fool yourself into thinking that the music will never stop. Speculative bubbles have happened before, and those that were in denial of the obvious bubble paid the ultimate price. Sir Isaac Newton, one of the greatest scientific geniuses in history, lost £20,000 in the South Sea bubble of 1720. Adjusted for inflation, that's equivalent to a whopping $4.4 million today. Asset bubbles, fads, and manias are not only limited to non-traditional investments. In the Roaring Twenties, many prominent businessmen and personalities lost their shirts and some committed suicide when the stock market collapsed. This was later known as the Great Depression, wherein lots of people lost their jobs, their homes, and a lot even starved to death. Did speculation stop after the Great Depression? Nope. There was the Japanese bubble economy, which lasted from 1986 to 1991. When the bubble burst in 1992, this led to what is known as the lost decade, or decades, since the Nikkei 225 index is still below its peak in 1991, even after more than 30 years. So am I saying that you should not buy overvalued, non-tangible, easily reproducible, and non-productive stuff? Nope. All I'm saying is that you should not fool yourself into thinking that you are an investor, when in reality, you are a speculator. Richard Feynman once said, "The first principle is that you must not fool yourself. And you are the easiest person to fool." So how do we differentiate between an investment and a speculation? Benjamin Graham, the father of modern security analysis and value investing, provided a great definition of an investment. An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Adequate return is debatable since we can't really know for sure what the future price of the asset will be. However, we can gauge safety of principal with some degree of confidence. Let me give you two simple examples. Suppose you bought a share of a cola company at a price-to-earnings ratio of 5. This means that you bought the company for 5 times its current annual net income, or an initial yield of 20% on your investment. Let's say that the company has been selling soda successfully for 10 years, and has also been growing its revenues 20% every year for the past 10 years. Dividends have also increased 20% annually for the past 10 years. What are the chances that you will lose more than half of your initial investment? Unless short-term interest rates rise way above 20% and the world suddenly loses its fondness for sugary beverages, it is highly unlikely that investors will lose interest in owning the company. As a counterexample, consider an investment in Bitcoin. What are the factors that could cause this cryptocurrency to crash? Could central banks launch a crackdown on cryptocurrencies because untraceable transfers of large amounts of money across countries is considered economic sabotage? Could governments also start making cryptocurrencies illegal because it is hard to tax cryptocurrency transactions? Is it possible that advancements in quantum computing will make mining bitcoins obsolete? These scenarios have already started and are already happening as we speak. So my point is, if you're speculating, admit to yourself that you are a speculator. Make sure to have backup plans in place so you won't be caught off guard with the majority of your net worth evaporating when the bubble bursts. You could also take some money off the table and shift your speculative profits to legitimate investments, such as index funds in an undervalued market or ETFs. Hi guys, thanks for watching. If you learned something from this video, please like and subscribe down below, and click on the notification bell to get the latest updates. You can also follow us on Twitter and Instagram for more content.